Hi students, today we are going to discuss one sample question paper. It contains 26 question and for every question what are the possible questions will be asking for exam, that also we will discuss. Okay, so this is the first question. In the absence of any agreement, the profit or losses of a firm are shared dash. The answer is equally. The answer is equally. Okay, so how we got equally? We already studied what are the rules applicable in the absence of partnership deed. Rules applicable in the absence of partnership deed. What are the rules applicable? Profit and losses. Profit and losses will be shared equally. Will be shared equally. First rule. And what about the salary? No salary will be there for any partners. If there is no partnership deed, we don't want to give any salary to the partners. And interest on capital. Interest on capital. Interest on capital. There is no interest on capital. And interest on loan. Interest on loan. What about interest on loan? 6% per annum per year. Okay, 6%. If there is any interest on loan to partner, we need to give 6% per annum. Okay, then what about interest on drawings? Interest on drawings. Interest on drawings. No interest on drawings. So what are the possible question from same question? So it can be asked if in the absence of partnership, any agreement, the salary of the firm, the salary to the partner are shared dash. That means no salary will be shared to any partner. You don't want to give any salary if there is no partnership deed. So these are the possible question which is coming from this area MCQ. Okay. Then second question. The interest on capital account of partners under the fixed capital method is to be credited to dash. So we already studied in basic lesson of partnership accounts. We already studied partners capital account in fluctuating mode and fixed method. Fluctuating capital method and fixed capital method. Under fixed capital method, you can see two accounts. First one is capital account, second one is partners current account. Okay, so the interest on capital account of partners under the fixed capital method, here it is clearly mentioned fixed capital method, is to be credited to dash account. So the answer is partners current account. You may be misunderstanding and writing partners capital account. Actually the answer is partners current account. Okay, so third one, at the time of admission of a new partner, undistributed profit appearing in the balance sheet of the old firm is transferred to the capital account of dash. So what is the question? At the time of admission of a new partner, that means then you want to think about the admission of the partner, the lesson admission of the partner. Undistributed profit appearing in the balance sheet of a old firm is transferred to the capital account of dash. So what are the undistributed profit and losses? It can be workman compensation fund, general reserve, profit and loss account, goodwill. Okay, so if anything among this is there in old balance sheet at the time of admission, what we will do? We will distribute to old partners in their profit sharing ratio. So what is the answer? What is the answer for third one? Okay, old partners in their profit sharing ratio. C is the option. Okay, so what are the possible question will be coming for this? At the time of admission of a partner, sometime they will ask general reserve appearing in profit balance sheet will be distributed to dash capital account. For that also we can write old partners in their old profit sharing ratio. So there can be different kind of possible question. Okay, and what about the fourth one? Mr. Agil and Miss Bhavya and Mrs. Clara are partners. On the retirement of Mr. Agil, the goodwill that is already appearing in the balance sheet rupees 44 lakh will be written off. So what is the question? If any goodwill are there at the time of retirement, what we will do? Same like what we did in admission. But if it is a retirement case, we will distribute to all the partners, not only the old partners, all the partners, including the retiring partners. So what is the answer fourth one? What is the answer for fourth one? So C is the answer for fourth one. By debiting the capital account of all partners in their old profit sharing ratio. Okay, that is the answer. Now come to the fifth one. The old profit sharing ratio among three partners, Ramesh, Sanjana and Tilak, was 2 is to 2 is to 1. The new profit sharing ratio after Sanjana's retirement is 3 is to 2. What is the gaining ratio? What is the gaining ratio? So how we can find this gaining ratio? So Ramesh, Sanjana's and Tilak. Ramesh, Sanjana's and Tilak. And Tilak. Tilak means T. Their old ratio is 2 is to 2 is to 1. And after the Sanjana's retirement, their new ratio is, after the Sanjana's retirement, their new ratio of R and S is R and T, not S, R and T is, that is 3 is to 2. Okay, then how we can find gaining ratio? Gaining ratio is equal to gaining ratio is equal to new ratio minus old ratio. Okay, so what is the new ratio here? New ratio, that is 3 is to 2. This one is the new ratio. So we can do like this, 3 is to, that means for gaining ratio for Ramesh, how we can find? Gaining for Ramesh, how we can find? That is 3 by 5, that is new ratio, minus 2 by 5 is equal to 1 by 5. Okay, so what is the gaining ratio of Tilak? Gaining ratio of Tilak is equal to, new ratio is equal to 2 by 5, that is here 2 by 5, minus 1 by 5, that is this one, 1 by 5 is equal to 1 by 5. So it means 1 is to 1 is the ratio. So the option B is the answer, that is 1 is to 1. Okay, this is the calculation. Now sixth question. If the total asset rupees 3,35,000 and the total outside or external liabilities is rupees 35,000, then the amount of all partners capital will be dash. So here it is given asset, total asset is given and outside liability is given. So there is an equation, asset is equal to, this you already studied in +1, asset is equal to asset minus outside liabilities is equal to capital. Here what is the question? We want to find all partners capital. Okay, so this is the equation. Here asset already given 3,35,000. Here all asset already given. This is the asset 3,35,000, and outside liabilities also given 35,000. Is equal to 3 lakh. 3 lakh is the answer. Okay, so what is the option? Option C is the answer. Okay, now seventh one. When the unrecorded assets are taken over by a partner, they are shown in credit side of realization account. We know what is realization account. What is the first step of realization account? Suppose imagine this is the realization account. What is the first step of realization account? All the asset will be recording this side, all the liabilities will be recording this side. What is the second step of realization account? We will settle our liabilities through this side, and we will settle all our liabilities through debit side, and we will write all our realized amount of asset in this side, credit side. Okay, so what is the question? When unrecorded assets are taken over by a partner, they are shown in Credit side of realization account. Credit side of realization account. I told you any realization amount we will write here, and unrecorded asset also amount also we will write in credit side. So credit side of realization account. Okay. So next question is eighth one. When the shares are forfeited, the share capital account is debited with. When the shares are forfeited, the share capital account is debited with called up value of shares. Okay. Ninth one, shares can be forfeited. What is the option? For failure of attending the meeting, that is not an option. For non-payment of call money, that is option. For non-payment of call money. Okay. Now 10th one, why it is non-payment of call money? Because if any in any installment, if there is any non-payment is there, that company can forfeit that share. What is by forfeiture? Forfeiture means cancelling that share due to non-payment, because of non-payment, cancelling that share. Okay. So if any slab of installment, if a partner, so if a sorry not if a shareholder is not paying, company has a right to cancel that share. That is called non-payment of share, and that is called forfeiture. Okay. So 10th one, in case of the issue of debenture as collateral security for a loan from the bank, which account will be debited? What is the answer? Debenture suspense account. Okay. So 11th question, A and B were partners in a firm sharing profit and losses in the ratio, sharing profit and losses equally. Okay. With effect from 1st April 2019, they agreed to share the profit in the ratio 4:3. Due to change in profit sharing ratio, A's gain or sacrifice will be dash. So what is the answer here? What is the answer here? Okay. We want to find yes, gain or sacrifice. It can be gain or sacrifice. Okay. If we are getting minus value, that will be a gain. If we are getting plus value, that will be a sacrifice. Okay. How we can do the answer? So here it is given old profit share ratio, old profit share of old profit share of old profit share of A and B is equal to 1:1. Old profit share of A and B is equal to 1:1. And what is the new profit sharing ratio here? It is given new profit share. How we got 1:1? It is clearly mentioned that A and B were partners in a firm sharing profit and losses equally. So their profit sharing ratio is 1:1. Okay, half and half. Okay. So new profit sharing ratio is equal to 4:3. It is given in question 4:3. Okay. So how we can find sacrificing ratio of A? So A's sacrificing ratio is equal to A's sacrifice or gain. If it is a minus value, we can say it is gain. If it is a plus value, we can say it's sacrifice. Okay. So what is the equation? New share minus old share. Okay. New share minus old share. So 4/7 is the new share of A minus old share, that is 1/2. So it's equal to 1/14. So it is a plus value, so it is sacrifice. Okay. So that's the answer for 11th one. Now 12th one, capital employed by a partnership firm is 5 lakh. Its average profit is 60,000. The normal rate of return is similar type of business is 10%. Okay. What is the amount of super profit? We already studied how to calculate super profit. There is an equation for finding super profit. We already studied. Super profit is equal to average profit minus normal profit. Average profit minus normal profit. Here they already given what average profit. It is 60,000 already given, their average profit. We need to find normal profit, then we can easily find what is super profit. Okay, so normal profit is equal to capital employed capital employed capital employed into no NRR, normal rate of return, divided by 100. So in this question, capital employed is given. What is the capital employed? Capital employed of the partnership firm is 5 lakh. So 5 lakh into NRR, normal rate of return is given 10%. Normal rate of return of similar type of business is 10%. So 10 by 100. So you can cancel this and this. So we will get 15,000. This is the normal profit. So now we can directly apply in that equation, normal profit. So we got normal profit already. Average profit is given, that is 60,000. So super profit is equal to this equation, average profit minus normal profit. So it's equal to average profit is 60,000 minus normal profit that we got here, that is 50,000. The answer is 10,000. Okay, so what is the option here? B is the option. Okay, that is the 12th one. Now we will do 13th one. According to the Companies Act, minimum subscription has been fixed at dash of issued amount, that is C, 90% of fixed amount. According to Companies Act, minimum subscription has been fixed at dash of issued amount. At least 90% of the issued amount of share capital should be subscribed by the public. Okay, so that is the meaning of this. At least 90% should be subscribed by the public from the issued. Okay, from the issued amount. Okay, so the answer is C. Okay, next one, 14th one. A company issued 50,000 shares of rupees 20 each at 5% premium of rupees 10 were payable on application and balance on allotment. What will be the allotment amount? Okay, so what will be the allotment amount? The allotment amount, how we can find? Total share is equal to 50,000. 50,000 we have shares. Total share is equal to 50,000. What is the allotment amount? Allotment amount is equal to 10 rupees. Okay, from here you can understand allotment amount is 10 rupees. So a company issued 50,000 shares of rupees 20 each at 5% premium. 10 were payable on application. Okay, so 10 we paid on application and the balance on allotment. Automatically the balance will become allotment. So 10 rupees is the total amount of allotment plus 5% of premium. 5% of premium means what? 5% of premium of 10. What is the 5% premium? 5% of premium of 20. What is the 5%? 5% means 1 rupees. So total amount is 11 rupees. Okay, so 11 into 50,000 will get 5 lakh 15,000. This is the answer. So answer is C, option C. Okay, that is the 14th one. Now 15th one. Gaining ratio means new ratio minus old ratio. Then what will be the sacrificing ratio? That is old ratio minus new ratio. Okay, sacrificing ratio. For this question they are asking gaining ratio, so the answer is new ratio minus old ratio. Okay, so if they are asking what is sacrificing ratio means, that is old ratio minus new ratio. Always remember in your mind. Okay, so what next one, 16th one. What treatment is made of accumulated profit and losses on the retirement of partner? What treatment is made of accumulated profit and losses on the retirement of partner? Okay, so we already discussed this. If any accumulated profit and losses, what are the accumulated profit and losses? Profit and loss account, general reserve, workman compensation fund, goodwill. These all are accumulated profit and loss account. That will be credited to all partners. All partners capital account in old ratio. Why? At the time of retirement, I told you, whatever accumulated profit and losses are there, we will credit to all partners, including the retiring partner. But at the time of admission, what we will do? We will credit to only the old partners. We cannot include the admitting partner. Okay, so that is the 16th one. Now 17th one. The partnership deed is silent on payment of salary to partner. Anita, a partner, claimed that since she managed the business, she should get a monthly salary of rupees 10,000. Is she entitled for the salary? Give reason. Is she is entitled? No. What is the reason? What is the reason? Because if there is no partnership deed, if there is no partnership deed, here it is clearly mentioned that the partnership deed is silent. If there is no partnership deed, whatever it may be, if she is a good employee in that company also, she is not entitled to get any kind of salary according to uh, absence of partnership deed. Okay, so no is the answer. Okay, now 18th one, it's a very important question. L Limited forfeited 470 equity shares of rupees 20 each, issues at a premium of rupees 3 per share for the non-payment of allotment money of rupees 8, including premium rupees 3. The first call of rupees 5 per share, final call of rupees 5 per share was not made. Out of this, 235 shares were reissued at rupees 19 each, fully paid. Pass necessary journal entries for the above transaction in the books of L Limited. Here what is given? What is the question? L Limited forfeited 470 equity shares. Whenever you are seeing a forfeited question, what is the journal entry for forfeiture? Normal journal entry. Share capital account debtor to share forfeiture account to first and final call. This is the journal entry for forfeiting of share. What is share capital? What is the share capital? The amount which we forfeited. Okay, here what is the amount which we forfeited? That is, what the shares which we forfeited. What is the shares which we forfeited? That is 470 equity shares we forfeited. 470 equity shares. It is clearly given in question. Okay, of rupees 20 each. And what is to share forfeiture account? Where what we will write? The amount which we received. That is called share. That amount we will write in share forfeiture account. So how much amount which we received? 10 rupees. Okay, 10 rupees which we received. And what is first and final call? The amount which we didn't receive, or the call money or the allotment which we didn't receive, that we will write in first and final call. It can be here, it can come allotment, first and final call, second call, everything will come. The amount which we received, that we are writing in this area. Okay, credit side. So in this question, one more thing is that security premium also given in this question. Security premium 3 rupees. So we need to change this journal entry. We need to include security premium also after share capital. Should be debited. Should be debited. Security premium. So this is the journal entry for share forfeiture. Now we can do what answer for this question. Okay, for this question, share capital is equal to share. What is the share capital value? Share capital is equal to share capital account debtor is equal to 470 total number of shares we forfeited, that is 417, into the value of one share, that is 20 rupees per share. Here it is given 20 rupees. Okay, so that is equal to 9,400. Okay, and security premium also given. Security premium also given. What is the security premium here? 3 per share security premium. So 417 into 3. So we will get 1410. Why we are writing security premium in debit side? Because security at the payment of allotment money itself, a shareholder failed to pay. That means we are for allotment money also we didn't receive. If allotment money we received means we don't want to write security premium. If the amount which we received we don't want to write again security premium. If the allotment money we didn't receive, that is why we are writing security premium again. Okay. So next one, to forfeiture. To forfeiture account. Forfeiture. That means the amount which we received, that is 10 rupees. How much amount we received? Here you can read the non-payment of allotment money onwards. It means we got application money, right? We got application money. So what is the application money? Application the first call money is 5, final call money is 5. So allotment money rupees 8. The total amount is 20. Okay, total amount is 20. So 5 rupees for allow first call, and 5 rupees for final call. ₹5 for final call. Okay, so 10 into 470, that is 4,700. Okay, 4,700 to forfeiture account, that amount which we received at the time of application. To share allotment, the amount which we didn't receive, that is share allotment. That is share allotment. What is the value of share allotment? Value of share allotment is, for share allotment, 8 rupees including premium. Okay, so 8 into 417, that is 3,760. And to first and final call, this amount also we didn't receive. What is the first call and final call? That is 5 rupees. Here it is given first and final call. Final call of rupees 5, it is given. So 5 into 417, that is 2350. This is the first slab of journal entry. So one more time I will explain. Share capital is equal to 470 into 20, that is total value of share is 20. So 9,400. Security premium is 3 rupees. Here it is given security premium 3 rupees. Okay, so 470 into 3, that is 1,410. To forfeiture account, amount which we received. So application amount we received. The application amount is 10 rupees. Okay, so 10 into 470, that is 4,700. And the share allotment is 8 rupees. That is including premium. Always keep in your mind. Including premium, 8 rupees. So 8 into 417, that is 3,716 to first and final call. Okay, that also we didn't receive. First and final call, that is 5 into 417, that is 2,315. Okay, and out of this, now coming to the second journal entry, out of this 235 shares were reissued at rupees 19 each, fully paid. Past necessary journal entries for that also. So what is the journal entry for reissue? For reissuing, we don't want to do any installment basis, that is application, allotment, first call and final call. We are passing directly a single journal entry. Completely we are taking with a single journal entry. So reissuing for rupees 90. Actually, what is the value of share? 20 rupees. But we are reissuing with a discount of 1 rupees. So we are giving on discount, right? So bank account debtor, how much we are going to receive? 335. We are reissuing 335 shares only. Okay, so 335 into 19, that is 4465. Okay, again to forfeiture account, that is 235 into 1. We will write the discount amount in forfeiture account. Okay, so how much we will get discount? We got discount, that is 1 rupees. Okay, the value of share is 20 rupees and we are going to reissue at 19 rupees. So 1 rupees discount, so 235 into 1, that is 235. Okay, to share capital, we are directly transferring to share capital without any installment, that is 4700, that is 20 into 235, that is 4700. This is the answer for question number 18. Okay, now we are going to do question number 90. What is the question? A and B are partners in a firm, sharing profit and losses in the ratio of 3:2. C is admitted as a new partner. Full stop. A surrenders 1/5 of his share and B surrenders 2/5 of his share in favor of C. For purpose of C's admission, goodwill of the firm is valued at rupees 75,000 and C brings his share of goodwill in cash, which is returned in the firm's books. Journalize the following transaction. Journalize the above transaction. So what is the question? This is a question related with admission of partner. Two partners are there, that is A and B. Their profit sharing ratio. Their old profit sharing ratio. Profit sharing ratio is given in this question. What is the old profit sharing ratio? Ratio is given. What is the old profit sharing ratio? That is 3:2 is given. That is here. 3:2 is given. Okay. And at the time of C is admitted as a new partner. A surrenders 1/5 of his share. So how we can find the sacrificing of A? So A's sacrificing is equal to 3/5. That is his share. That is 3:2. His share is 3. So 3/5. Here it is given. Okay, 3/5 into 1/5. He surrenders 1/5 of his share, that is 1/5, that is 3/25. A sacrifice. Same like that. Similarly, B's sacrifice we want to find. Sacrifice of B is equal to 2/5 into, what is the amount of this he sacrificed? 2/5 into 2/5, that is 4/25. 4/25. Okay, so their sacrificing ratio is equal to 3:4. 3:4 is their sacrificing ratio. 3:4. 3 from here, 4 from here. Okay, so that is 3:4, their sacrificing ratio. Okay, now we want to find the goodwill of C. How much goodwill C want to bring to the firm? How we can find? For finding that, we want to find C's gaining ratio. What is C's gaining ratio here? C's gaining ratio is equal to how much A and B sacrificed. That is called C's gaining ratio. How much A and B sacrificed? A sacrificed 3/25. B sacrificed 4/25. Right. So 3/25 plus 4/25 is equal to 7/25. Okay, this is the C's gaining ratio. Okay, now what we will do? Now we want to find how much C want to bring as a goodwill. So here it is given total goodwill of the firm. How much? 75,000. Okay. So 75,000 is the total goodwill of the firm. 75,000. So how much C want to bring? C want to bring how much he is going to gain. So how much he is going to gain? 7 by 25. 7 by 25. That is 21,000. That is 21,000. That is 21,000. Okay, so now this 21,000 will be distributed to old partners in their sacrificing ratio. Always keep in your mind, goodwill of new partner, that means incoming partner, will be distributed to old partners in their sacrificing ratio. So what is the value here? 21,000. 21,000 into, so A will get, A is equal to 21,000 into, what is his sacrificing amount? That is 3 by 7. Here it is given sacrificing amount. 3 by 4 is the sacrificing ratio. So for A will get 3 by 7. That is equal to 9,000. B will get 21,000 into 4 by 7. That is 12,000. Okay, this amount will be distributed to whom? To old partners in their sacrificing ratio. They already we distributed. This is a distributed sacrificing ratio. So how we can write journal entry? Journal entry is equal to journal entry is cash account debtor. How much is the cash account? 21,000 C want to bring. That will be giving to old partners. That is yes capital. Yes capital how much? 9,000. We already find. Yes capital is 9,000. And B's capital, that is 12,000. Credited to B's capital, that is 12,000. Okay, so this is the answer for question number 19. Okay, now we will go to the question number 20. It's an easy question. On 1st April 2012, A Limited took a loan of rupees 5 lakh from the State Bank of India, for which the company issued 8% debentures of rupees 6 lakh as collateral security. Full stop. Record the issue of debentures in the books of the company. Okay, this we already studied in debentures lesson debentures. Okay, so here it is clearly mentioned they are going to take a loan of 5 lakh and they are going to give as a collateral security, as a security 6 lakh rupees debenture. Okay, so at the time of taking loan, only two journal entries are there. At the time of taking loan, we will write bank account debtor to bank loan account. So it will be 5 lakh. We are taking a loan of 5 lakh. Okay, so what will be the narration? Being bank loan taken from SBI, being bank loan taken from SBI. This is the narration. Okay, this is the first journal entry. What is the second journal entry? After taking bank loan 5 lakh rupees, we are giving a collateral security of 6 lakh. Right? We are giving a collateral security of 6 lakh. Right? This given 6 lakh rupees we are giving as collateral security. So what is the journal entry of collateral security? Debenture suspense account debtor to, we are giving 8% debenture as a collateral security, right? So 8% debentures account, so that is 6 lakh. This is the answer. Finish. Only these two journal entry you want to do for this question, 20th question. Okay, so what is the first journal entry? First journal entry, at the time of taking the loan, we will write a journal entry, that is bank account debtor. That means this much amount we received 5 lakh to bank loan account. Okay, so at the time of giving Debenture as collateral security, we want to write debenture suspense account debtor to 8% debentures account. So that is the answer for that question. Now come to the 21st question. 21st question. It's a simple question. We already did for, I think, many questions we already did. So still I am going to explain. STL Global Limited was formed with a nominal share capital of rupees 14 lakh, 40 lakh, okay, divided into 4 lakh shares of rupees 10 each. The company offers 1,30,000 shares to the public. So we need to do everything with 1,30,000 shares to the public. Of rupees 3 per share on application, rupees 3 per share on allotment, and balance on first and final call. Application were received for 1,20,000 shares only. So this is what under subscription. Application we received only for 1,20,000 shares. That you want to keep in your mind. So we will do all the journal entry with 1,20,000 shares. Why? Because we received only 1,20,000 shares. So we supposed to do only all the journal entry with 1,20,000 shares. No, we don't want to do anything with any other shares. Okay, because how much we received, by using that only we will do everything. Okay, so 1,20,000 shares, we want to do everything with 1,20,000 shares. All money payable on allotment was duly received except 200 shares held by Y. First and final count was not made by the company past necessary journal. Here call scenario is also there. Or why? Because all money payable on allotment was duly received except 200 shares. At the time of allotment money, a shareholder having 200 shares, they didn't pay the amount for 200 shares. So that we want to mark in call scenarios. And first and final call was not made by the company. So we don't want to do for first and final call also. So what is the answer? We will start with bank account debtor to share application, bank account debtor to share application. What is the amount? 1,20,000, 1,20,000 into 3. What is the amount of application? Here it is given public share payable 3 per share on application. Here it is clearly given. So 1,20,000 share into 3, that is 3,60,000. 3,60,000. Okay, this is the first entry. Second, this we will transfer into share capital. So share application account debtor to share capital. Share application account debtor to share capital. How much? 3,60,000. 3,60,000. Okay. Now we will directly go to the share allotment. For share allotment, there is a call scenarios for 200 shares. It is given in question. A person having 200 shares held by Y is failed to pay. So that we want to record in share allotment at the time of share allotment. But for the due entry, there won't be any changes. I already told you there will not be any changes for due entry. So directly we will write share allotment. What is the value of share allotment? For share allotment also it is given 3 per share allotment. So the amount is 1,20,000 into 3, that is 3,60,000 itself. 3,60,000 to share capital, that is 3,60,000 itself. Okay, now where will changes will come? At the time of receiving the money. I told you this is an external factor, so there won't be any change in due entry. Okay, this is the due entry. There won't be any change in due entry because this is an external factor. So at the time of receiving the money of allotment, we will record that call scenario. So bank account debtor call scenarios call scenarios account debtor to share allotment. So what we will write in bank account after deducting 200 shares? Okay, what is the value of one share at the time of allotment? That is 3 rupees. So 200 into 3, 600 we will write in call scenarios. After deducting 600 from 3,60,000, that amount we will write here 3,59,400, and the full amount we will write in share allotment, that is 3,60,000. Okay, this is the journal entry. This is the answer for question number 21. Okay, next we will go for question number 22. Okay, what is the question number 22? It's a very simple question. A and B are partners with a capital of rupees 22,000 and 26,000 and 22,000 respectively. They admit C as a partner with 1/4 share of profit of the firm. C is bring rupees 26,000 and 5,000 as his share of capital and goodwill respectively. Give journal entry to record C's admission. So here only two journal entries are there. First one is at the time of admission of C, he is bringing a goodwill of 26,000, right? That we want to record. What is the journal entry? First journal entry, cash account debtor to C's capital. You just think about our admission of the partner. What we are writing in capital account, we will write in C's account, right, in credit side. So for that, this is the journal entry. Cash account debtor to C's capital. What is the amount? 26,000. He bought 26,000 as his capital. Here it is given 26,000. Okay, and he bought goodwill of 5,000. Here there is no ratio is given. No sacrificing ratio is not given. Profit sharing ratio also not given. So we can just consider as the ratio is equal. Okay, so the amount goodwill he bought 5,000, we will distribute to all the partners in their sacrificing ratio. So here the no ratios are given, so we'll imagine that the ratio will be equal. So what will be journal entry? Cash account debtor to A's capital, B's capital. Okay, what is the goodwill he bought? What is the amount of goodwill he bought? 5,000. So how much we want to give to A? 2,500, half of 5,000. For B also half of 5,000, that is 2,500. So this is the answer for question number 22. Now we will go for question number 23. Okay, what is question number 23? V Limited issued 20,000 equity shares of rupees 10 each at a premium of rupees 3, payable as follows: on application rupees 4, on allotment rupees 5, including security premium. What is the security premium? 3 rupees. Okay, it is given in question. So what will be the allotment money? 2 rupees. So including security premium, that is 5 rupees. And one first call rupees 2, on final call rupees 2. All shares were duly subscribed and all money duly received. Pass necessary journal entries. It's a very easy question. Only security premium is given extra. Other all are direct question. Okay, so what is the answer for this? What is the answer for this? What is security premium? It's a internal issue, not an external issue. Okay, so it will be included in both the due entry and bank entry. Okay, so what is the first journal entry? Bank account debtor to share application. How much? Bank account debtor share application 80,000. That I don't want to explain from where you got 80,000, because application money is 4 rupees. So total 20,000 shares. So 20,000 into 4, 80,000. Okay, now this we will transfer into share capital. So share application account debtor to share capital. How much? Same amount, 80,000. Okay, now What is the next one? Share allotment. What is the amount of share allotment? That is 5 rupees, including 3 rupees premium. Okay, so share allotment, this is an internal factor, so it will be included in due entry also. So share allotment account debit to share capital to security premium account. So here 5 rupees is the allotment amount. 20,000 shares are there, so it will be 20,000 into 5, that is 1 lakh. 1 lakh. And to share capital, in any cases, whether it is internal factor or external factor, share capital will be its nominal value. That means the real amount only. That is 2 rupees. 2 into 20,000, that is 40,000. 40,000. Then what is the security premium? 3 rupees is the security premium. So 3 into 20,000, that is 60,000 will be going to security premium. This is the second journal entry. And third journal entry onwards, it's normal. Nothing is there. Still I am going to write, that is bank account debtor to share the bank account debtor to share allotment. Bank account debtor to share allotment, that is 1 lakh. Why it is 1 lakh? Because including security premium we are going to receive, that is 1 lakh. Okay, so including security premium we are going to receive, that is 1 lakh. Now next one is share first call account debtor to share first call account debtor, not allotment, share capital. How much? 2 rupees the value of share first call, so 2 into 20,000, that is 40,000. This we want to transfer into share capital. This we want to transfer into bank account. So bank account debtor to share first call, that is 40,000 and 40,000. Same way we'll do for what? Final call also. Okay, we'll do for final call also, that you can do. Okay, same way we want to do for final call also. Okay, no other adjustment, anything, directly you can do. Okay, that also you want to do. Now question number 24. ABC Limited issued 10,000 equity shares of rupees 10 each, payable as follows: one application for, one allotment for, on first call rupees 2. All shares were duly subscribed. A shareholder having 200 shares failed to pay final call money. Company decided to forfeit that shares and reissued at rupees 8. Pass necessary journal entry. Here 2 extra adjustments are coming. What is that? 2 extra journal entry. We are going to forfeit 200 shares and we are going to reissue that forfeited shares. Okay, what is by forfeiting of shares? Due to non-payment of any installment, whether it is call or final call or first call, company will have a right to forfeit their share. That is called forfeiture, cancelling of share. Okay, so what is the first journal entry? Normally we will write bank account debtor. Normally we will write, start with bank account debtor to share application, that is 40,000. Next one, share application account debtor to share capital, share application account debtor to share capital, that is 40,000. Okay, Okay, what is the next journal entry? Share allotment. Share allotment. There is no call scenarios in share allotment. Only in final call scenarios came. So till share allotment we can do same procedure, no different. So share allotment, account debtor to share capital. Share allotment account debtor to share capital account. How much? 40,000, because 4 rupees is the allotment amount. So 4 rupees into 10,000, that is 40,000, 40,000, 40,000, 40,000. Now this we will receive through bank. This amount will be received through bank account debtor to share allotment, that is 40,000, 40,000. Okay, 40,000 for the 40,000. So next one we will do final call. At the time of final call only we got a call scenarios. Okay, so I told you this is an external factor, so nothing will happen in due entry. So share final call account debtor to share capital account. What will be the amount? That is 2 rupees is the value of share final call, 2 rupees. Okay, so 2 into 10,000, that is 20,000, 20,000, 20,000. Okay, 20,000, 20,000. So at the time of receiving the money through bank, it will be like that. Bank account debtor calls in arrears account debtor to share final call. So what will be coming in call scenarios? How many shares they failed to pay? They failed to pay 200 shares. Okay, at the time of final call. So what is the value of final call? 2 rupees. So 200 into 2, that is 400 rupees. So after deducting 400 from 20,000, only we will receive how much? It will be 19,600. In share first and final call, it will be 20,000 only. Okay, this is the journal entry for call scenarios. Now these 200 shares which we didn't receive, we are going to forfeiture. So what is the journal entry for forfeiture? Normal journal entry without premium. Share capital account debtor. How many shares we are forfeiting? 200 shares. So 200 into, what is the value of one share? 10 rupees. So 2,000. Okay, to forfeiture account. What we will write in forfeiture account? The amount which we received. So till allotment money we received the amount, right? Till allotment money, that is how much? 8 rupees. 8 rupees. That is 8 rupees. Is it correct? So we can check. Okay, 4 on application, 4 on allotment, total 8 rupees. Okay, so 8 into 200, that is 1,600 in credit side, 1,600 to the amount which we didn't receive. Which amount we didn't receive? That is final call. Is 200 into 2 rupees for final call. 200 into 2 rupees per share in final call. That is 400. This is the answer, 400. Okay, now we have how much shares? We have 200 shares. It is simply there in our company. So that share we are going to reissue for 8 rupees. It is clearly given in question. We are going to reissue for 8 rupees. Same share. We are going to reissue for 8 rupees. Okay, that is 2 rupees discount. So what is the journal entry? We already discussed it in above. What is the journal entry? Directly we are going to reissue. We don't want to any installment basis or anything. Directly we are going to reissue. So what is the journal entry? Bank account debtor, that is 8 into 200 shares. Actually value is 10, but we are using for 8 rupees. What is the reason? Because reissuing for discount. Okay, so it will be 1600. Then discount amount we will write in forfeiture account, that is 2 into 200, 2 into 200, that is 400. To share capital, the total amount, that is 2000. Only this much is there. Okay, still two more question is there, that we will discuss in next video. Thank you.